Okay, guys, so this is a session on extended trial balance. So this is from a Kaplan question. So it is an extended trial balance. So the way it is going to work is basically we have been given an extended trial balance here with the original numbers. So it has got a trial balance which has been provided to you originally. Then we have these adjustments columns, and then we have the statement of profit or loss, and then we have the statement of financial position. So our task is this particular question has got some adjustments or some errors or something which has happening after the end of the year, after the close of the year. So what we have to do is we have to do the journals, and then we have to start recording the journals on this particular extended trial balance. And we have to also then record the original trial balance and then move them to the statement of profit or loss or statement of financial position. Now, if you look at this particular question, so this is an extended trial balance here. We have been provided with these following journals here. So there is depreciation of shop fittings 400 and depreciation of leasehold 1000. So this is our first journal. The answers are already here, so I've already written down these answers here. So depreciation is expenditure. So hence depreciation will always be a debit 400. And when you depreciate, you would credit accumulated depreciation shop fittings. Now it depends on the question. So if they have given you enough space, if now in this particular question they have given space for two journals. So we are putting two journals separately. One is for the shop fittings and the other one is for the leasehold. In some situations, what they do is they just do like one journal, but they provide space for like, like the total depreciation. Now, if you look at this extended trial balance here, there is only one depreciation charge, and one below the other, they have given you the names of the asset, which is fittings and lease. Whereas accumulated depreciation, if you see here, they have given you shop fitting separately, and they have given you accumulated leasehold depreciation as well. So the opening balances have been given to us. And this is the end of the year. So thankfully, we did not have to calculate the numbers here. The numbers have already been given to us. So depreciation of shop fittings was 400. Depreciation of leasehold was 1000. So we debited depreciation and we credited accumulated depreciation shop fittings, £400. Now, that was for shop fittings. The next journal was the depreciation for leasehold. So what we are going to do is we'll finish all the journals first, and then what we will do is we will start putting them into the extended trial balance one after another. You won't get a full-fledged question to do something like this. They may give you fully completed question, but they may ask you to do just a few journals, and they will ask you to just finish the extended trial balance by inserting those particular numbers which the journal you are doing for. Okay, so here a debt of 500 is irrecoverable and is to be written off, and the doubtful debts allowance is to be 3% of the remaining receivable. Because it is two-part question journal, again we have to do two journals. One is for the irrecoverable debts. So you have learned this in level 2 as well. When you do a journal, when you do a irrecoverable debt is a loss, and hence you would debit irrecoverable debt and credit SLCA or RLCA, whichever as the case may be, like whatever, both are exactly the same. Whatever words they have given you, you use them accordingly. Because it's a decrease in the value of the SLCA, you would credit it. Okay, then the next one, next journal, I would just write it here. So what I will do is I need to put one more journal here. So I need to make a space for one more journal. So just let me just insert a few rows here. Insert. I should have done one more line. Insert, yeah. So what I will do is I'm going to do this journal, and I'm going to Control C, Control V. Okay, so yeah, that's fine. So this is the journal for this is the journal for let me just clear these numbers. Yes. So the doubtful debts allowance is to be 3% of the remaining receivables, they are saying. So now what is this remaining receivables? Let us have a look. So the calculations are here on this place here. So the original SLCA from your trial balance was 10,000. Always remove the irrecoverable debt. Always minus the irrecoverable debt first because they are not going to pay. So remove this 500, take away the 500. So you're left with 9,500 SLCA. Now they're telling you 3% of that they want to be as provision. So if you calculate 3% of 9,500, it comes to 285. But from the question, you already have an allowance for doubtful debts at 800, which is much more, right? So the provision is already there, which is much more. Now they want a lesser provision. So when you decrease the provision, because provision is always a liability. Yeah. So when you decrease the liability, it is a gain. Yeah. So the double entry will be, so for adjusting the allowance for doubtful debts, we always use two accounts. So the one is the actual allowance for doubtful debt and the other one is the adjustment. Adjustment is like a P&L account. So if it is a gain, you debit it, and if it is a loss, you credit it. Okay, so now in this particular situation, I have gained. Why? Because the original one was 800, the new one is 285. So the old, so the difference, so let me just write down here. So the original allowance was 800. The new allowance is only 285. So it means it is a gain, or you can call it as a decrease in the liability. Okay, and hence the difference of 515 needs to be credited to allowance for doubtful debt adjustment because it's a gain. Okay, and allowance for doubtful debt original figure 800 was there. It was a liability. It is going down, and hence you would adjust that 515. So this is about your allowance for doubtful debts. Now what are we going to do? We are going to just write this journal here. Whatever we just said, we are going to write. So what account is going to be debited? Allowance for doubtful debts is going to be debited. So let me just write that. Allowance for doubtful debt is a debit of 515, and allowance for doubtful debts adjustment. So this time there is a gain, guys. So we are going to record it as a credit. So always remember, if the provision goes up, it's a loss. If a provision goes down, it's a gain. All right, always remember that. So this is the adjustment. Next one is going to be advertising fees of 200 has been treated incorrectly as wages. So if the advertising fees has been incorrectly recorded as wages, it means advertising expenses should have been originally debited, but what they have done is they have debited wages instead. So what we are going to do is what was wrong, you credit it, and what is now right, you debit it. So wages was wrong. It was wrongly debited, isn't it? So that's why we are going to get rid of it. But accounting understands the language of debit and credit. So what you want to basically get rid of, you would do the other way around. So originally, if you had debited, you would now credit it. So the wages are going to be a credit and advertising expenses are now going to be a debit. The proprietor has withdrawn goods costing 1200 for personal use. These have not been recorded as drawings. So when a proprietor withdraws anything, whether it is cash or whether it is purchases, drawings, it is drawings. Now it depends what they are withdrawing. So because it is drawings, yes, we know sure that it is drawings account debit. Now if it is goods withdrawn, what is happening with the goods is, if let us say you have a corner shop and then you take the proprietor, the owner, takes some milk from the stock that they bought for the shop. The proprietor is using for their personal use. So what is happening is the stock that they buy for their shop is classed as purchases. But then if the proprietor is going to use up some of the milk, let us say, for their personal use, it means the purchases for the business has gone down. So purchases is a debit otherwise, but here the purchases will go down and hence purchases is a credit. So 1200 drawings and purchases would be 1200 credit. So that was the journal for that. Now the inventory at 30 31st December. See guys, these journals are really very important. So if you understand these journals, how to do these journals and how to record these journals, half your job is done. Okay, so these journals so you need to understand how to do these journals. So let us so the proprietor has withdrawn goods costing 12. This is done. Next one is inventory. So the inventory, closing inventory, the inventory at 31st December. So the date says that it's the closing inventory. It is valued at 21,000. So if it is valued at 21,000, the closing inventory, which is there sitting in my warehouse unsold, is classed as an asset, and hence it is debited to statement of financial position. The one because it is sitting in my warehouse, I have to rectify my accounts. So what I have done is I had taken the opening inventory in the beginning, then I added some things to that. I purchased a few things. Now the things that are left in the warehouse is not sold. So if something is staying unsold, by law, I am not allowed, according to accruals principle, I'm not allowed to show that as a expenditure in the current year, right? So that is why I have to get rid of it. So closing inventory, which is sitting in my warehouse unsold, is classified as a reduction in the cost of sales, and hence it is a profit. Okay, it is a profit for this year, and hence it is a credit to closing inventory, credit to the statement of profit and loss, and hence it is showing as 21,000 here. Then the next one is the rates included in the trial balance relate to the 15-month period to 31st March 2007. So how are we going to calculate? So 15-month period was 31st March to 31st March. So my year end is December. So 3 months they are paying extra. Now let us see how much was the rates otherwise. So my rates for 15 months they have paid is 1,800. So what I will do is I'm going to divide this by 12. So 1,800 equals 1,800 divided by 15. Okay, times by which comes to 120 per month. Okay, so 1,800 divided by 15 comes to 120 per month. 3 months they have paid extra, isn't it? It's a prepayment. So it equals 120 times 3 is the prepayment. So this is your answer. Okay, so the prepayment is 360. So if it is a prepayment, then surely it is a prepayment is an asset, which is also a reduction in this year's rates, and hence it is a credit of 360. So this is how you would record all these journals. Now, how are we going to record all these things? So what I will do is I'm not going to touch any of these which are already there. I will only rectify the ones which are here. I will upload them, and then I'll start moving all the other journals. Sorry, I will record all the other transactions. So let me just show you now. Depreciation shop fittings debit and accumulated depreciation shop fittings credit. Now, what am I going? If any of these adjustments, guys, okay, any of these adjustments, I will record them originally only on adjustments. I'll finish all the journals first, and then I will start doing the actual SPL and the SFP. So first I'm going to record all these journals. So depreciation debit shop fittings. So where is the depreciation shop fittings? Here it is. So shop fittings, I will not record it on the original trial balance. I will record it here. Okay, bear in mind any adjustment which was not there originally, I cannot record it here. So shop fittings account debit, accumulated depreciation shop fittings credit for 400. So on the adjustment, you should have for the same amount, you should have one debit and one credit. So 400 here, 400 here. Then for the leasehold, it is 1,000. So I'm going to record on the debit side here as 1,000, and I'm going to record on the accumulated depreciation for leasehold as on the credit side as 1,000. Okay, so this is your first journal. I'm done. First and the second. Next journal is irrecoverable debt debit, RLCA credit. Okay, fine. Now irrecoverable debt debit here, and that was 500, isn't it? So let me just record that. So irrecoverable debt account debit 500 and RLCA credit. So where is my RLCA? RLCA is here, which is SLCA. So I'm going to write on the credit of that account. Sorry, I have recorded on the, on the SLCA on the credit side of is 500. Then what is going to happen? Next journal. Allowance for doubtful debt debit, allowance for doubtful debt adjustment 515. So this is what we are going to record. So allowance for doubtful debt we have the allowance for doubtful debts already here. Okay, so it was 800. Now it is less. So it is going to be, it has to go down. So I'm going to record it here as 515. It's a debit. So allowance for doubtful debt debit, allowance for doubtful debt adjustment credit 515. So this is how I record. I literally just follow the journal, guys. I find the suitable account and I just record it on the correct side of the adjustments. Okay, I'm just doing that. I'm doing nothing right now. The most important part is understanding these journals. You have to do these journals, start recording them on the extended trial balance on the correct side. That is very important. Next one is advertising fees is 200 debit and to wages credit 200. So now where is my advertising? Right. So my advertising here is a 200 debit and wages credit 200. Okay. Then the next one, next journal is going to be drawings debit, purchases credit, right? So do we have drawings here? Do we have drawings here? Yes, we have drawings here. Yeah. Drawings debit. Where's the drawings? Where is the drawings again? Yeah, 1,200. Okay. And the purchases are going to be a credit of 1,200. So what did I do? I just found the journal. The journal was drawings debit, purchases credit. So I find the accounts from here. So drawings debit, purchases credit. I literally just do the journal. I put the numbers on the extended trial balance. That's all I'm doing right now. The next journal, these calculations are very important. So all the calculations are here on the side. So that will help you. Then the inventory, the closing inventory is always a debit on the statement of profit and loss, like I explained earlier. So SOFP, so it is a gain. So what is my closing inventory? It is 21,000. So I have to record it on the statement of profit, financial position, 21,000. And then I have to do 21,000 here as well. Okay, I've already explained what is the reason. Then, is there any other journal? Yes, there is one more journal. Prepayments debit, rates credit. Prepayments debit 360. Rates credit 360. So this is how I would record. All right, this is how I would record. Now what I will do is all these adjustments, we can color code them if you want. If you're doing on Excel, we could fill these numbers or fill 400. Each journal we can color code them. So for practice purposes, you can do that. Okay. Now what I'm going to do is I'm done with the posting the journals. Now my task is to move them to the statement of profit or loss or statement of financial position. So always see if there is any adjustment to each of them, right? So if I look at the shop here in this particular thing, there have been no adjustments, and this has to move to the statement of profit and loss. So sorry, this is a asset. So if you want, guys, you just write the category here, A. Okay, so if you want to write the category here, A is asset. Yeah. So if it is because it's an asset, it has to go to the statement of financial position. So here equals 7,300. So you post it as an asset. Accumulated depreciation on the fittings was already, now this one is a liability. Okay, so L. Now, accounting shop fitting depreciation was already 2,500. It is a further credit. Credit plus credit is a further credit. Because it's a liability, it goes on the credit side. So equals 2,500 plus 400. That will give you 2,900. Okay. Next one, leasehold premises is again an asset, and there is no adjustment. There is nothing in the adjustment column here. So it's an asset. So equals the same number, no changes in the asset. So I just move to assets here. Accumulated leasehold depreciation again is a liability. There was already one depreciation here. I added further 1,000. It means it will add the number. So equals this plus this 7,000. Inventory at 1,116. So this is basically your opening inventory, guys. Okay. So let me just write in the beginning. It is for the year ended. This is the question. All right. So if it is 1,116, it means it's an opening inventory, guys. So opening inventory just needs to be recorded on the profit and loss. So it gets recorded like this. All right. SLCA at 31st December. Now SLCA is an asset. So inventory here is a cost of sales. Okay. So I'm going to record it as a expense here. Inventory. All right. SLCA is an asset. Now, because it's an asset, now one is a debit here. On the adjustment, it's a credit. So debit and credit means it's a minus. So equals 10,000 minus 500. That will give you a new figure here. Allowance for doubtful debts. One is a credit. The other one is a debit. Okay. And it's a allowance, it means it's a liability. So it has to go on your statement of financial position. So because obviously the credit was more, and this can never be a debit though. Okay, so there has to be something. So equals this minus this. Can you see this 285 is basically the new figure of this is what we found out, isn't it? So it should show at the new figure. So the allowance for doubtful debt should be the new figure. All right. So that is how it will work. Cash in hand is an asset. We know that. So equals cash in hand allowance, this one. Then even cash in bank is an asset equals 1250. So C15. So if you want, again, right here, cash in hand is an asset. Cash in bank is an asset. PLC is a liability. Proprietor's capital is a liability or capital basically. Drawings is classed as a reduction in the capital. Okay, so you can say minus capital or you can call it as an asset as well. But some people call it as an expenditure, but it is basically a reduction in capital. Negative capital, they call it. Negative capital. So drawings is again, it has to go on the, sorry, let us look at the PLCA now. PLCA, there are no adjustments. So directly on the SOFP, statement of financial position. Then proprietor's capital, again, is 19,050. So here, this, I will just quickly check at the end whether that needs to be. So let us finish everything else because I will, whether this needs to be recorded as like if there is a profit at the end. So do we have to add that as a profit at the end, or do we need to just put net profit at the end? So that is what we will quickly have a look. Okay, so so the capital just needs to be recorded as it is because there is a profit figure at the end. So what we will do here is, guys, proprietor's capital, we will just put proprietor's capital here. It's a liability. So we will put it here. Then drawings, as you see, it is a debit. There is a further debit. So what we will do is it has to add. So 4,750 plus 1,200 gets added. Okay. Purchases figure, it's a profit and loss figure. Okay. And originally debit minus, and you all remember that the drawings has been taken. So purchases is a minus. So equals 80,000 minus the purchases. So it goes down. Next one, revenue. We all know revenue is income. So I'm going to record it as an income here on the statement of profit and loss. There is no change. Then the next one is wages. Wages, originally it was 12,000, but I had recorded by mistake. So I'm going to reduce that, but wages is an expenditure. So it stays. Always remember, debits go on the debit, credits go on the credit. So that original figure is never going to change. The original side is never going to change. If it is SPL, it stays on the debit side. If it is SOFP, it stays on the if it's an asset, it goes on the debit. So debits stay on the debit, credits stay on the credit. They can never change the sides. Okay. Where are we? Yeah. So the wages, it will reduce the figure. So 12,000 minus this. So it will be 11,800. Advertising also, there was an original debit. There is a further debit. So it means we have to add the numbers. 4,000 plus 200 will be added. Rates for 15 months. Again, rates is an expenditure. So let me just write here. Purchases is an expenditure. Revenue is an income. Wages is an expenditure. Advertising is an expenditure. Rates is an expenditure. Bank charges are expenses. Depreciation are expenses. Fittings are assets. Sorry, fittings are asset. Lease is also an asset. Irrecoverable debt is an expense. Allowance for doubtful debt adjustment is either expense or it can be income. Okay. Then prepayments are assets. Closing inventory, SOFP, is an income. Sorry, a financial position is an asset and SPL is a income. All right. So this is how we are going to record now so that it makes, so this thing makes your life much easier. So when you're practicing, it is better you do something like this, guys. Okay. So rates for 15 months. Where are we right now? Did we finish all of this? Wages. Yeah. Yeah. So 11,800, 4,000, 4,200. Rates is an expenditure. So equals 1,800. Sorry, minus 360. Minus 360, making it 1,440. What is wrong with this? Let us see, there was a problem with the formula they are saying. Adjustments. Okay, so this one here is an advertising cost. 4,000 plus 200 equals 4,000 plus 200. Okay, I don't know why they're coming like this. Right, next one, bank charges, guys, is also an expenditure. So equals 200, done. Depreciation, fittings, and this put together, you could either write the total depreciation cost or you could write them separately, guys. Equals this equals this. Okay, then irrecoverable debt is an expenditure as well. So equals 500. Then prepayments are an asset. So I'm going to record it here. Equals 360. Okay. Closing inventory, statement of financial position, it goes here, equals 21,000. And then closing inventory SPL is going to be a gain. So I'm going to record it here. 21,000, statement of profit and loss. All right. So we are now done with all our postings, guys. Okay, we are done with our postings. So what I did was I did all the journals, then I moved all the journals to the extended trial balance. Then I just did the extended trial balance. So just let us give a quick glance at if we have done it correctly. Okay, so shop fittings at cost, it is in the correct place. Then accumulated depreciation 2,500 minus 400, sorry, 2,500 plus 400, 2,900. Leasehold is here, sorry. So leasehold is on the correct side. Then account depreciation is on the correct side. Okay, now our task is, guys, to find out the net profit. Okay, so let us do that now. So if I want to add up all the accounts, okay, so what we will do is we will do a subtotal column here. Okay, so we will create a subtotal column because we need a subtotal so that then we know whether which side is bigger. Okay, so it is like a T account, right, guys? So subtotal. So let us do a subtotal. We don't have to. So let us do all the totals. So equals sum of. What I'm going to do is I'm going to add all the numbers starting from here, the entire column, so that then till here, yeah, close the bracket. Okay, so then here equals okay. Let me see if the formulas has been dragged. Some D7, yeah. And let us look at this formula now. 25,175. Wait 1 second, guys. Okay. Now again, let us do Control V in the subtotal column this time, guys. Okay, we'll do a subtotal here. So we come to, so the debit side total is 113,340 and the credit side total comes to 120,000. So it means my credit side is bigger. It means it's a gain. So equals this minus this gives me a, 1 second, there is something wrong. Wait, so subtotal 113,340. Okay, something is missing here. Oh, it has not got added. Okay, equals 141,515. Where did I record the 515? Oh, this we missed, guys. This one, allowance for doubtful debts adjustment. We missed this, okay? So let me just add this here. So 515. Sorry, 1 second, wait. Okay, so let me just check again if I have recorded everything. Okay. Doubtful debt adjustment. Yeah, we have not recorded this one. So doubtful debt adjustment. Yeah, so we have not recorded this. Okay, so let us put the subtotal in this column equals. Again, let me just do sum of this entire thing equals sum of till here. Okay, so 141. So the moment I change this, the profit is figure is 28,170. So I had not done this 515, guys. That's why I was getting a wrong answer. So my profits are 28,175, giving me a total of, so this plus this is the total, and this is going to be same as. So bear in mind, yeah, so we have, it is like a T account. Okay, now this profit figure needs to be recorded on the statement of profit and loss on the liability side, guys. Okay, so equals 28,175 needs to be recorded here. All right, now let us see the total of the entire thing. So let us see. I'm not copying and pasting the formula because just in case if I have not highlighted all the columns, guys. Okay, so let us see all the way. Now this both should match. This is our target, guys. Okay, your assets and liabilities should match. So comes to 75,410. Now our target should be equal to sum of, again, let us see, starting from here all the way till that net profit figure, I have to take the numbers till here. Close it. There you go. These both are matching. Okay. So if these match, it means we are on the right path. Okay. So this is the end of our extended trial balance question. Okay. So try using the same logic that I've done, and then I think you should be okay after that. Okay. All right. I'm stopping sharing the screen. Thank you so much. Bye.